Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 4th of August 2018, and this is the first part of two videos where we highlight what we believe will be the influences on the silver price for the remainder of 2018 and where we predict prices will end up at the end of the year. At the time of publishing, silver prices currently stand at $15.42 an ounce, some 8% or $1.34 down on exactly a year ago, and down some 9.5% or $1.64 since the start of 2018. So without doubt, 2018 has so far proven to be a lackluster year. In 2018, prices have oscillated between about $15.20 and $17.55 an ounce. Experts are not necessarily surprised, but of course many are hoping for a better performance before the year ends. There are a number of factors which could affect the price from here on, and we have consolidated them into 5 major influences. They are as follows. 1. Geopolitical issues. Like gold, silver prices often increase when geopolitical issues are at play. When Donald Trump won the US presidential election in late 2016, many believed safe haven demand for precious metals would spur higher silver and gold prices, especially as Trump was seen as a most controversial and unpredictable figure. However, that instability hasn't yet translated into higher silver prices. However, Trump continues to cause concern, having formerly been described as flirting with war with North Korea and Iran, and now clashing with China and Russia, the latter by his administration, if not directly by the president himself. The president is locked in a trade war with the Asian nations, with both the US and China imposing tariffs on each other. He has also threatened tariffs with our European partners, though recently this may have been resolved. And we must not forget the ongoing battle with Canada. So far, however, what we have witnessed has run contrary to conventional wisdom that political unrest favors safe haven assets. Investors will have to see if this trend changes as these and other geopolitical issues continue to develop. 2. Interest rates. In general, higher interest rates tend to put pressure on non-interest-bearing assets like gold and silver. Conversely, when interest rates are lower, precious metals tend to perform better. However, last year there were 3 rate hikes and gold prices rose instead of falling, while silver was relatively flat. The US Federal Reserve has raised rates on the back of an economy that has been growing at a steady pace, but it could slow the pace of rate increases if there is a change. Currently, there is no consensus on how many hikes there will be in 2018, although the central bank is expected to keep raising rates. The rate hike in June was the 7th in the past 3 years, despite the comments of investor guru Peter Schiff stating at the time, and we quote, "There is no way the Fed can raise rates," unquote. We believe that at least another rate rise is on the cards, and possibly 2 before 2018 is out. Despite this, it's worth noting that precious metals prices could rise even if rates continue to increase. According to Investopedia, despite the widely held belief that there is a negative correlation between rates and precious metals prices, quote, "A long-term review of the respective paths and trends of interest rates and gold prices reveals that no such relationship actually exists." However, please notice that it mentions long-term review. 3. Price manipulation. Some silver market watchers and a number of our subscribers believe that the reason prices have seen little momentum in recent years is that a small group of institutions has been shorting silver. Ed Steer of Gold and Silver Digest and the Gold Antitrust Action Committee has explained the idea in the past, noting that JP Morgan and a handful of others are involved. In early November 2010, US law firm Kaplan Fox and Kilsheimer filed a class action complaint on behalf of an individual investor, Eric Nalvan. The suit named JP Morgan and HSBC in connection with an alleged conspiracy and manipulation of the market for silver futures and option contracts traded on the COMEX exchange in New York. The complaint alleges that around June 2008, when JP Morgan acquired Bear Stearns and its short positions in silver futures, JP Morgan and HSBC started a conspiracy to manipulate the market for silver futures and options contracts for their own benefit. Despite this, charges against the firm were dismissed in 2014 and again in 2016, although the 2016 charges have since been appealed. Our own view is that there is price manipulation, not particularly by the Fed or the US government as some believe, but by greedy institutions attempting to make a quick buck. Now we know some disagree with this, but to be frank, our next point will highlight why we believe this. After all, such manipulations can only be achieved short term, and it is extremely difficult to believe that they can achieve price suppression for the past 7 years. After all, it took no time at all to identify those institutions, including Deutsche Bank, who were guilty of manipulating LIBOR rates, did it? 4. Traditional supply and demand. Perhaps the most reliable document we can go to, though it is historic in nature, is the Silver Institute's World Silver Survey, which is produced for the Silver Institute by the GFMS team at Thomson Reuters. Now, before anyone dismisses this survey, the major sponsors include, and we wish you to take note of these, Coeur Mining Inc., a precious metals producer with 5 mines in North America employing 2,000 people. Fresnillo plc, the world's largest silver producer and Mexico's second largest gold producer. Industrias Penole SAB de CV, which is the world's top producer of refined silver and the leading Latin American producer of refined gold and lead. Pan American Silver, the world's second largest primary silver producer. Wheaton Precious Metals, the world's largest pure silver and gold streaming company. And a host of other numerous gold and silver and precious metal mining companies. Now, we mention these because it is in these companies' best interests to obtain and promote as bullish a report as is possible. And yet, despite this, the annual report portrays sobering reading. The 2018 report, published just over 3 months ago, and which we produced a video on the 5th of May, highlighted the following points. 2017 saw the 5th recorded silver market deficit in a row. A deficit of some 26 million ounces was recorded, with mine supply falling by 4%. To put this mine supply fall in context, though, it follows 13 consecutive years of annual increases up to 2016. Physical demand contracted by 2% in 2017 due to a fall of some 27% in coin and bar demand. A fall of some 27% in coin and bar demand, falling from 207.8 million ounces to 151.1 million ounces. This is now the second consecutive annual decline in coin and bar demand, falling from 292.1 million ounces in 2015 to 151.1 million ounces in 2017. On a positive note, jewellery demand rose by 2%, silverware by 12%, and industrial fabrication by 4%. In fact, the interesting factor here is the ever-increasing use of silver for industrial purposes. In 2017, demand for industrial fabrication represented some 70% of mine supply and 60% of total silver supply. This compares with 2016 of 65% and 56% respectively. So 70% in 17 versus 65% in 16 of mine supply, and 60% in 2017 compared with 56% in 2016 of total mine supply. One of the main reasons for this is that photovoltaic demand rose by 19%, driven particularly by solar panel usage, mainly by Chinese households. So mine supply is down 4%, with total supply down 3.7%. Coin and bar demand is down 27%, with total physical demand down by 2.3%, resulting in a physical deficit of 26 million ounces. And once factoring in ETP and exchange inventory build, a total deficit of 35.2 million ounces. There are a lot of figures there, but basically what it is highlighting is that demand is down, although supply is also down. The average price of silver fell from $17.14 in 2016 to $17.05 in 2017. So in view of this, we should not be surprised to have seen little change in the average silver price. Now, for years, people have been screaming manipulation. And whilst we have some sympathy here, as mentioned earlier, basic economics tells us that if supply equals demand, then price is likely to remain constant. A deficit of 35.2 million ounces is tiny if one considers that even the most conservative assessor values above ground stocks of silver with almost immediate access at around 1 billion ounces, with a fair number quoting closer to 2 billion ounces. So a continuous 35 million ounce deficit can be arguably catered for over the next 30 years before supply becomes imperiled. Now, we're not advocating that because, of course, any continuous deficit will, of course, cause prices to gradually increase. But with industrial usage now accounting for 60% of total supply, and frankly little on the immediate horizon for this to increase significantly further, unless of course you believe that the world economies are going to grow well above its current 2 to 3%, then the only factor likely to affect supply in any great numbers is a rise in demand for investment purposes. And we have seen these figures actually falling recently. It's worth bearing in mind that any major impact on industrial demand is more likely to be negative, especially if the tariff situation gets out of hand, as global demand will inevitably fall. Equally, if world economies pick up, then although this may be advantageous for silver producers, it is likely to mean that demand for silver as a monetary metal will fall further, thereby cancelling one another out, as funds will be even more avidly directed towards the stock markets. 5. Internal US politics. On Tuesday, November the 6th, 2018, midterm elections will take place. All 435 seats in the United States House of Representatives and 35 of the 100 seats in the United States Senate will be contested. Currently, the House of Representatives stands as follows: 236 Republicans, 193 Democrats, and 6 vacancies due to resignations, planned resignations, and death. In the Senate, there are 51 Republicans, 47 Democrats, and 2 independents. The Democrats have to defend 10 seats in states that Donald Trump won, and on top of that, if they want to reclaim control of the Senate, they have precious few opportunities to take seats from Republicans. But there is a path for Democrats to win the Senate. It starts with winning 8 or 9 or all 10 of those seats they're defending, and then winning 2 or 3 or 4 of the Republican-held seats in the following states: Nevada, Arizona, Tennessee, Mississippi, Texas, and Nebraska. So although at the moment the Democrats feel moderately confident that they may indeed win the House of Representatives, they are far less certain about the Senate. We're of the opinion that if the Democrats win both houses and the Mueller report is negative towards the president, then impeachment proceedings will most certainly begin. But even before the election takes place, if the polls show that a blue wave is likely to sweep over the elections, then we can certainly predict that markets will become more turbulent, providing they haven't moved dramatically before then. And until the election is over, we would expect to see monies leaving the stock market and moving into gold and silver. However, the more dramatic moves we believe will occur post the election and perhaps early into the new year. On Monday, we shall highlight the highs and lows we expect the silver markets to reach before 2018 is out, and our reasons for it. So please look out for our next video. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com. And if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.